Assalamualaikum everyone, my name is Nur Shahira Ashikin binti Azmi, and today I would like to talk about the consumer credit. Have you heard about this term? Are you familiar with it? If you're not familiar, do not worry, I will explain to you today. So let's begin. So consumer credit is related to the individual or a family that has limited amount of money and to purchase goods and services. Using the credit, it can increasing their purchasing power. Consumer credit also can be defined as the power to buy or borrow on trust. So why does we need to borrow? They have several reasons for that. So the reason why do we borrow it is because we can use the money to pay for the good purchase without the immediate cash. And secondly, it is because it can enable us to require expensive assets, and also it can use to enable us to tide over the emergencies. There are several types of credit. Firstly, we have open account credit, which is the credit that offered by the financial institution, such as credit card, overdraft bank, charge card, and retail charge card. So in open account credit, the credit card, which is something that we are already familiar with, its function can delay the payment, purchase, and since it's a small card, it is convenient for us to bring it everywhere, and it also does not have to make a detailed record of every transaction since it's already recorded for us. Secondly, the charge card. It is very similar to the credit card, but if we are required to pay the full payment within 10 to 20 days, and using the charge card, we can make purchase without immediate cash. For example, the American Express and the Diners Club. Thirdly, the retail card. Retail card is usually offered by the department store, the petrol station, and several specific kind of retail store. It's offered to their customer to encourage them to buy their goods and service only. Full payment had been made within 10 to 20 days, and it usually offers some discount with the purchase. And lastly, the overdraft. Overdraft is a little different from the previous one, from the credit card, charge card, and retail card. It is in form of the check, and it can be activated only by check, and it is given depends on the consumer income, and it is also allowed to borrow up to the predetermined amount. Okay, move on to the second part. Second part is I'm gonna explain about the loan. So loan and credit has the same concept, but there's a little bit different because loan is involved with the large amount of money for us to buy like property, like house or a vehicle, something like that. Loan also have the longer repayment period, and the contract of loan are official, and the agreement and the negotiate agreement involve every detail of the loan. So loan is divided by three parts, which is personal loan, vehicle loan, and also the educational loan. For personal loan, individual usually get the loan for their personal expenses, and it also depends on the purpose, and it also have a higher interest than the other loans. So for the second type of loan, which is vehicle loan, it is very common in our community because it is used to buy the used or new car. It is also period limit is between 7 to 10 years of repayments, and maximum loan can up to 85% of the payment of the value of the car, and it also have to pay it a monthly basis. And lastly, the third loan, which is educational loan. The parents usually take out the loan for their children to pursue the study in the higher level, and with this loan, it can manage their living expenses, hostel expenses, purchase book, computer, and also their tuition fee. And with that, that's all from me. Thank you. Assalamualaikum.
Assalamualaikum warahmatullahi wabarakatuh. I am Nordina binti Mazri from BA243A with student ID of 2021-117579. I am going to explain about the estate planning. Estate planning is a process of disposing of an estate after one's death. Estate means money, properties, or simply heirlooms left by the deceased, which includes movable and immovable assets. It is important to do a proper estate planning because the beneficiaries of the deceased may face a delay in unlocking the estate's frozen assets if we do not prepare earlier. Estate planning includes wills and fara'id. First of all, will is a written document that specifies a person's decision for how his or her estate will be governed or dispersed after their death. There are 5 elements or stages in the administration of an estate. Firstly, we have to recognize the beneficiaries of estate. Secondly, is to collect and realize the deceased assets. Next, we must pay the deceased funeral and testamentary expenses as well as their debts. After that, we have to distribute estate, and lastly is to complete the administrations and distribute the residues. A will can be revoked by these 4 reasons. First of all, marriage. A will is revoked by a marriage or remarriage unless the will is made in contemplation of particular marriage. Divorce or separation doesn't revoke a will. Next is destruction. Revocation will happen if the testator destroys the will physically with the intention of revoking it. Accidental or malicious destruction made by the third party will not revoke it. The third one is the existence of the later will. A subsequent will would automatically revoke an earlier will whether or not a revocation clause is written in it. And the testator can also revoke a will by making a written statement of his intention signed in the presence of 2 witnesses. Lastly, conversion to Islam. This happened when a non-Muslim converts to Islam because his or her distribution of wills will be made following the fara'id rules of distribution. Up next is fara'id. What is fara'id? Fara'id is the law of inheritance in Islam, which is also known as the ilmul fara'id. Fara'id is made based on the Quran and Hadith. When a Muslim dies, those who live must do following order of sequence of rights on the estate. Firstly, we must discharge all of his obligations relating to his religions, such as zakat, various kafara, or penalties for oath, zihar, coercion whilst fasting in the month of Ramadan, and coercion whilst in the state of ihram during Haji or Umrah. Next is to pay for his funeral expenses, and thirdly, we must help settle all his debt to his fellow beings. The settlement includes the performance of Haji on his behalf if he had not already done it in his lifetime, and the payment of mahar if payment had not already been made. After that is to execute his will. A will is not for a person's heirs. The amount of estate provided for in a will or for disposal shall not exceed 1/3 of the remaining estate after the settlement of the first 2/3 sequence mentioned earlier. Lastly, we must distribute the remaining estate among his heirs after settlement of all sequence before. There are 3 causes of inheritance under fara'id. First of all, nikah or by valid marriage contract in Islam. Secondly is wala, which means relationship where the cost for the inheritance of the emancipator to the estate of the emancipated slave is the benefit of emancipator over the emancipated person. And lastly is nasab or kinship, relationship through the womb or blood. Under the fara'id, the heirs to Muslim estate are divided into 3 main groups, which are the Quranic heirs, ashabul furud, the agnatic heirs, and the baitul mal.
Assalamualaikum. My name is Nurain Fazlin binti Zakaria. I am going to explain about investment planning. What is investment planning? Investment planning is the process of identifying financial goals and converting them through building a plan. It is a planning in the main component of financial planning. Investment is putting out money to be sure of getting more money back later at an appropriate time. There are 7 types of investment planning. The first one is investment in saving account. It is when the depositor can earn interest or can participate in profit sharing with the bank by having a saving account. The long-term objective can be used to ensure fixed assets, while the short-term objective to meet unexpected use of cash, buy short-term assets or for vacation. The second type is investment in fixed deposit. There are 2 under investment fixed deposit. The first one is conventional fixed deposit. It is a payment of interest is subject to Association of Bank Malaysia. The other one is Islamic fixed deposit, which using al-mudarabah with no interest. The third type of investment is investment in share. It is type of stock that is sold to the public in its common stock. To get fund, company needs long-term financing, can issue common stock. It is wide range of choices with low transaction costs, and it is easy to monitor that can immediate sell and buy at any time. Number 4, investment in bonds. To finance the company's long-term assets, a bond is a long-term debt instrument issued by a corporation, either public or private. There are 3 types of bond, which are Malaysian government securities, government investment issues, and convertible bond. For investment in residential home, it is a real estate property which is not occupied by the owner. What is the advantage? It is become very mobile, do not need to pay for down payment, legal fees, and any cost of others. It also can avoid falling house prices. For investment in residential properties, it is a property investment is where investor make a small investment into a property, then go on to rent it out to cover mortgage repayments. The last type of investment is investment in unit trust. Unit trust is a trust that is established by a trust deed, a deed between an investor, a fund manager, and a trustee. The objective is to get a certain level of return and with an acceptance level of risk. It is also known as managed investment. Allow fund manager pools money from numerous investors to invest in a portfolio of assets such as deposit, stocks, and bond.
Hi, Assalamualaikum. My name is Nur Izzat Atira binti Husnizam. My matric number 2021102401. I'm from BA 24038. What is retirement planning? Retirement planning means preparing today for your future life so that you can continue to meet all your goals and dreams independently. This includes setting your retirement goals, estimating the amount of money you will need, and investing to grow your retirement savings. Every retirement plan is unique. After all, you have made very specific ideas on how you want to spend your retired life. Therefore, it is important to have a plan that is designed specifically to suit your individual needs. Do you know what is important in retirement planning? Firstly, to maintain the standard living. You want your current lifestyle to continue even after retirement. Today, these expenses are covered by your monthly income. After retirement, you can plan to get a regular income to cover your daily expenses. Next, to be prepared a life longer. You may need to save a lot more for your post-retirement expenses, since the average life expectancy is higher today. By planning in advance, you can make all the arrangements for a longer post-retirement incomes. Lastly, to be emergency ready. You will not want to depend on anyone in case of any financial emergency or medical expenses. With the right retirement plan, you can build an emergency fund that will keep you prepared for unexpected events. You can't control unexpected events in your life, or in the markets after retirement. Whatever happens, there is definitely a risk. Do you know what is the risk of retirement planning? Firstly, inflation risk. Inflation can reduce the value of your property, but the effects of inflation are harder when you retire than when you work. While working, inflation can be faced because you have a source of income and salary payments are according to the current inflation rates. When you retire, you don't work and have no source of income. All expenses come from retirement savings. To avoid falling victim to inflation, it is necessary to seek professional advice to give you a better view of the amount required after retirement, after considering inflation. Next, unexpected change in healthcare needs. Although people usually have greater healthcare needs, they may need frequent treatment for a number of different health-related issues. Due to advance in healthcare and technology, human age is also increasing. Even though it is a good thing, you may still have to face high problems for medicines. While it is one of the important aspects, most individuals does not include medical costs in their retirement plans. For those who include it, there are still concerns due to the lack of funds for such costs. If you are unsure, it is best to discuss the impact of medical expenses with your financial planning. Other than that, unforeseen needs of family members. Many retirees find themselves helping other family members, including parents, children, grandchildren, and siblings. Any expenses incurred for this purpose should be included in their retirement planning. Retirement planning should recognize the possibility of providing financial support for family members in the future, even if it does not seem likely at all before retirement. Lastly, stock market risk. Stock market loss can seriously reduce retirement savings. This loss can occur even in retirement, as retirees generally require some money invested in the stock market to earn reasonable returns. Common stock have substantially outperformed other investment over time, and thus are usually recommended for retirees as part of balanced assets allocation strategy. Early loss can mean less income during retirement. Later loss can have a less negative impact, as an individual may have a much shorter period over which the asset need to last.
Hi and Assalamualaikum. My name is Tuan Aisyah Amilin binti Tuan Muhammad Faizal. My ID number 2021117321. For today, I would like to talk about insurance planning. What is insurance planning? Insurance gives you peace of mind and protects you from potential financial loss. An insurance company, often known as an insurer, is a company that shares in the financial risk of losses resulting from an injury. People buy insurance, and the company takes on the risk in exchange for a regular payment that the insured policyholder pays. There are three concepts. First, large group of people who want to insure against a particular loss pay their premiums into a fund that called as insurance pool. Second, someone in that group of people suffers a hardship. Third, he or she is given an amount of money from the fund to help ease the hardship. Insurance is a legal agreement between an individual and the insurance company, under which the insurer promises to provide financial coverage against contingencies for an amount premium. The types of insurance in Malaysia can be broadly divided into two categories. First, general insurance. Second, life insurance. Life insurance. Life insurance plans offer coverage against unfortunate events like death or disability of the policyholder. Besides financial protection, there are various types of life insurance policies that allow the policyholder to maximize their savings, through regular contributions into different equity and debt fund options. You can choose a life insurance policy to secure your family's financial future against life uncertainties. The policy coverage comprises of a large amount which is payable to your loved ones if anything happens to you. With this insurance type, you have the flexibility to choose the life insurance policy period, coverage amount, and payout option based on the financial requirement. There are 6 life insurance. First, term insurance. Second, whole life insurance. Third, endowment plan. 4. ULIP, unit link insurance plan. 5. Money back plan. And the last one, annuities, or we call pension plans. Next, general insurance. General insurance policies are one of the types of insurance that offer coverage in the form of sum assured against the losses incurred other than the death of the policyholder. Overall, general insurance comprises different types of insurance policy that offer financial protection against loss incurred due to liabilities such as bike, car, home, health, and semi. First, travel insurance. Second, medical and health insurance, investment-linked insurance, education insurance, home insurance, and the last one is motor insurance. Why we need life insurance in our life? First, to ensure that immediate family has some financial support after the injured demise. 2. To have a savings plan for the future. 3. To ensure that your immediate family members are able to maintain their standard of living upon our demise. 4. To finance children's education. 5. To ensure that an extra income available. 6. Income tax relief. So that's all from me. Thank you.